Show, where you get the latest developments in distressed note investing and learn the secrets of how you can control millions of dollars worth of property for pennies on the dollar. Get educated and entertained by someone who has closed thousands of deals and lives to support you in achieving the same. Now, here's your host, CEO of We Close Notes, Scott Carson.
Hey, note investors. Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closure Show. As always, Scott Carson. Excited to be here with you today. Today's, we've got a special kind of case study that we're going to talk about that I thought so many people could learn from this, especially if you're a new note investor and are looking to get rocking and rolling, to get started. I wanted to talk about this deal because at first it looks like it's attractive or unattractive. And I wanted to make sure and go through the numbers to help you guys identify deals or duds. And this deal it's an interesting deal, and I'll give you a little of the background. Recently got a listing from a hedge fund that we get stuff on a regular basis. It had over 200 assets in it. And what was unique about it was a mixture of performing and non-performing notes. Okay. And they had the strike price. The seller actually literally listed the strike price. Now, if you don't know what the strike price means, the strike price equates to basically what their bid is, what they want you to bid at. Now, that strike price may go up if there's multiple bidders, but this is their kind of their bottom of the barrel. This is what we want to sell it at, and we'll sell it. Now, that strike price across the different assets varied anywhere from like 40 cents on the dollar all the way up to 128% of legal balance, which is just stupid. That seller's smoking a lot of crack, which I actually reached back out to the seller and he's like, yeah, the broker that we're dealing with, which we've dealt with on a regular basis, is completely a legitimate broker. He's like, yeah, the sellers, I don't know what they're thinking, but that's what they want. So this is what I'm sharing with them. Like, okay, I'm just making sure I'm not missing anything. So I'm looking at this list and narrowed the list down, obviously, to things that I've started eliminating the stuff that didn't make sense. Like anything over 100% of the legal balance, I got rid of it. And I even reduced that down to something in the 70s of legal balance, because most of these assets had value. They had equity above what was owed. And this is, when you see a note that's performing or non-performing, and it has equity, this often trips up a lot of investors out there. They don't know, oh my God, there's equity. How do I bid? Well, on a performing note, you're probably going to bid somewhere in the mid 80% of the legal balance, which the legal balance should be pretty close to UPB if it's performing. And that's if there's equity, great, you still have at least 20% potentially profits. Now, if there's a non-performing note with equity, they probably still want you to come in around the same thing, but you may offer less depending on what's going on with how much equity is there, what kind of percentage you're buying at, and going from there. So anyway, I'm going through my list, and this one note shows up. And one of the things I look at first, I look at states on the list to see what's available. I love Florida, God's waiting room. And of course, I love the Lone Star State where I live in. I mean, it's not one of my top 5 states because I often don't see stuff here that makes sense. But lo and behold, this tape had about 15 different notes here in Texas. And when I ran through my due diligence and sliced and diced, was a samurai note investor and whittled my list down, there was a couple that made sense. And this one that we're going to talk about, actually, at first look, I thought it might make sense. And that's what I wanted to share with you today, the Cen-Tex note deal, if it's a performing note deal, and if the price makes sense, and if it's a deal or a dud. All right. So this is a picture of the property. It's a nice looking property. It's just north of me here. I mean, I live on the north side of Austin, Texas, on the north side of Travis County, south side of Williamson County, basically. And this, like I said, if we see something here, I really look at it. And this is a nice looking house. It's just north of me. Literally, I was surprised. It's about a 20-minute drive north of me, 11 miles north of where I live. And I was like, oh, wow, I actually might know that area. And it's in an area here in Central Texas that's just booming. I mean, let's go through the numbers here a little bit for you guys and gals. It's in Williamson County, Texas, which is one of the hottest growing counties in the state. This is actually in a gated community in Williamson County where they're all on about acre and a half, 2 to 3 acre lots. Really beautiful location. You look at the street views, you can see some stuff, the Google Maps, stuff like that looks good. Driving through it, like I said, it's gated. You got to have a gate code to get in, stuff like that. But it's a nice house, 4-bedroom, 3.5 bath, almost 4,400 square foot, and it's on 1.39, 1.4 acres. It's near a creek in Williamson County there, which is really nice. And looking at the comps, I talked to my agent, my buddy Boyd Pops here. I used to own a mortgage company with. He's still a mortgage broker, but also a real estate agent here. And he said, he was able to jump on the MLS and take a look at it. He said, hey, Zillow gives it a value of 980K, but you could see realistic values being up to 1.1 or higher. Now, those higher end, you got to worry about with days on market expanding. But there's been stuff that literally was listed in the last 90 days that have been listed for 2 days that went under contract. Similar square footage that went for 100 grand more above what the list price was. So the days on market aren't really big in this area, which is kind of a surprising aspect of things. But things have sold in the last 90 days there. Wasn't a lot for sale right now, but it's in a nice, desirable area. The current unpaid principal balance on this one is $296,000 some change. They do have a legal balance of $330K, which when you have a $30,000 difference, what was that, $34,000 difference in legal, that kind of raises a flag. So this wasn't always performing, is what that tells me. Okay. Now on the spreadsheet I got, we have had a lot of information about the interest rate and stuff like that. And I'll get to that in a second here. But it didn't show. It said, oh, it was current. It was a current performing loan. I'm like, okay, but if they've got a legal balance, it's a big difference. They were non-performing at some point. Now, the strike price of this, which is what drew my attention to it and would drive many people's attention to an asset like this, is that the fund only wanted 76% of legal, or $250,746. So they wanted basically, like I said, 76% of legal, which is a difference of $80,000, right? Which is not too bad. In the discount there, I'm like, oh, that's not so bad. 250, that's technically roughly at 25% of value, which most people get in those, say, oh my God, I can pick up this property at 250. That's the first thing that you have to realize as an investor, is you're not picking up a property here. You're not picking up the actual asset. Yes, it's great. It's got a value of $1 million and you can control it for $250,000, but your investment of $250,000 only really entitles you to that $330,000 legal balance, not anything above that. And that was the first, like, okay, does that make sense? Is it worth still pursuing this to take this asset down and have $80,000 in equity? Well, yeah, it would if it was non-performing. That's not so bad, because here in Texas, what are some things about Texas we have? Well, Texas, we have fast foreclosures, fastest foreclosure, state in America, 21 days. If they miss payment or get more than 90 days behind, you start the foreclosure process. Okay, great. They were behind at some point. All right. Now, let's talk about that aspect of things. Does it make sense? Let's look at the default, or how far behind are they? Well, they say it's a performing note, but when you look at it, it's really only been performing since August of this year, when it was modified. It was a COVID modification, home affordability modification, was a HAMP modification. So at some period during COVID in the last 2 years, which is, if you look at the principal and interest payment of $1,098, all right, and you go back here, and the UPB difference is basically $34,000. They were roughly about a year or two behind, and looks like they just took advantage of the COVID modification to go from a 30-year mortgage to a 40-year mortgage. Oh, let's drag it out some more. Instead of it being due when it was originated in August of 2008, which would have made a 2038. Well, it's now 2000. If you add 40 years, 2062, 40 years from today. So they've drug it out a little bit. It's still at the same interest rate, 3.125, and they kept the same principal and interest payment of $1,098.76 based on the spreadsheet. Now, how they could go to the same payment, same interest rate by going from 30 years to 40 years, I don't know on that. They do owe back taxes just for 1 year of $18,000 based in the county, and $18,000, that's just 1 year, and we have a little higher tax, property taxes here in Texas. And this went up by 50% from 2021 to 2022. In 2021, the taxes were 12 grand, and then this year it was 18 grand. So they're technically behind by 1 year taxes. And the question is this a deal or a dud? You tell me. Personally, the first thing I'm going to do is like, okay, if they do keep paying, what's my monthly cash flow look? What's my interest rate return look like? So if they keep paying 3 1/8, what's my 1,098.76 principal and interest payment look like off my investment? So 1,098.76 times 12 months is equal to $13,185 basically in principal and interest payments to me in a year. If I divide that by my $250,000 investment on it, okay, 257.46, that's only a 5.25% ROI. That's not very good. But what do I think that these people are going to refinance at some point or sell the property? I don't know. I doubt they're looking to sell the property anytime soon, because then we would basically either get paid off in cash, which that could be a nice $80,000 difference. That would be decent, but there's no guarantee that they're going to refinance. And with rates currently being at double what they are, I don't think that they're going to refinance. Okay, I don't think they're going to sell the property. Yeah, they've got a tremendous amount of equity there. Roughly, what is that? Almost $770,000 in equity, or anywhere from $650,000 up to $700,000, and that property value will keep going up. But I don't think they're going to refinance anytime soon or sell, because they've had this equity for a while. Now, the fact that they were behind, I don't know how many months behind they were on this deal before they modified it. But right now, I'm not excited about this deal. I don't want to tie up $251,000 for an extended period of time to make 5.25 with hopes that they'll refinance this year or next year or 3 years from now. Because there's that $80,000 difference between what I pay for the note, or what I would pay for the note, versus what the payoff is. Now, if they did it in a year, let's just look at that. If they went and got refinanced out and I suddenly had the difference, they paid me my $330,000, that's owed legal balance, subtract the $250,746, that means $79,254 would be my profit margin. But I've got to pay my investors some point, right? So $79,000, make gross profit on that, right? Well, if I'm paying let's just say $250,000 and I'm paying at 0.06, that's 15 grand a year I need to pay to my investors. Now that's not even covered by the principal and interest payment. Now, hopefully I could find an investor maybe to partner on, which wouldn't be bad. And for this amount, I would set up a separate LLC. It'd be one asset and one LLC for this amount. That way we're splitting cash flow and eventually splitting profits on the refi. But that means that their money is only going to be making about 2.65 or 2.57, really less than 2.6% annualized, with a hopeful payoff of 40 grand on their deal. So if we look at $40,000, we'll just round it to 80 grand gross profits, divide that by their $250,000 investment with me. That's a 16% cash on cash return if they do that in year one. Year two, that gets reduced to 8%. It takes them to 3 years. That's reduced to an annualized of what? 4%. So we would expect interest rates to stay high for a while. So while 80 grand looks great initially, and some Yahoo's probably going to bid on this with that idea that, oh, we'll be able to foreclose. Well, first of all, you're not getting the property. If you had to pay the taxes and then foreclose based on a tax default, you're only going to be entitled to the $330K, which somebody would file, a borrower of this magnitude would do. They're not going to let it go to foreclosure. They're going to file bankruptcy and drag it out even longer. So initially, hey, 80 grand can look positive, or you're buying a note in Central Texas at 25% of value or at 73% of the legal balance. It sounds great, but this is a dud. All right, this is a dud. It's exciting. It's a great little case study. Who doesn't like sexy properties? Yeah, but it's a good looking property in a great neighborhood, but it is not a note unless you've got cheap money and you want to tie up your money for a period of time. Your ROI is better spent doing something else than making a 16, 8, 4, or 2% if this thing takes more than 4 years to take back, and that's not exciting. So that's what I wanted to share with you guys, this kind of case study, deal or dud. You'll be seeing a lot more of these. If you're listening to this on iTunes, I always encourage you to go over and subscribe to our YouTube channel at WeCloseNotes.tv to actually watch the live video with some of the numbers and the breakdown as well, and see an image of the property. But expect you guys to go out, take some action, and we look forward to seeing you in the next episode. And have a great day.